Hello and welcome to this exclusive Mountain Summit podcast. Mountain Summit is an amazing entrepreneurial event, taking you and your business to new heights. Taking place in the stunning landscape of Snowdonia from the 25th to the 27th of April. I'm Jenna Burton, and in this episode I'm joined by the founder of Mountain Summit, Nick Wood. We speak with Dan Newman, a representative of Quant, an external financial consultancy which we are proud to announce as one of our sponsors. Dan is a certified chartered accountant who is based in Chester and has worked in accountancy practices for 15 years. Dan has a wealth of experience. He has worked with a huge number of clients across a variety of sectors. Just some of his experience involves planning, corporate finance, buying and selling, business advisory, and entrepreneurship. Quant is a business that is based on value-driven propositions, and the team works hard to invest their time in understanding their clients and developing a collaborative relationship which works from both sides. Whether you're a small local business or a bigger company, Quant can offer expert financial advice and a lasting relationship with a team who truly cares about your business. I hope you enjoy this episode. So thank you very much for giving us your time today, Dan. We really appreciate you coming on the podcast.
Thank you.
Could you start by introducing yourself to people? So just tell people a little bit about what you do, who you are. Tell us what Quant does as a company. And maybe this can be a separate question, or maybe you can venture into this. But what was the journey for Quant as a business? What are you doing that brings significance to the lives of entrepreneurs, and what do you hope to achieve?
Absolutely, yeah. So thank you for having me. Obviously, it's really pleased to talk to you guys today. So my name's Dan Newman. I'm a certified chartered accountant and I'm based in Chester. And I've worked in accountancy practices for the thick end of 15 years. Time has flown by. But yeah, I've been an accountant man and boy. I've never really ventured into any other sector or profession.
You've never worked in a coffee shop, Dan?
Oh, I've swept my fair share of floors, and I've done my fair share of bartending, but yeah, very early on.
Okay.
It's quite a kind of strange story, but I left school not knowing what to do, and I was kind of confused, and there was a role down the road in a finance team. Accidentally fell into accountancy. I don't think too many people at 7 or 8 decide I want to be an accountant. They usually want to be a footballer or an astronaut. But yeah, I found I had an aptitude for it and qualified quite young, and then worked my way up through a local practice or a number of local practices, and managed to get myself to director partnership level, which I continue to do now. But I also found there was a big gap in the market in terms of external financial consultancy for businesses. And it's kind of from there that Quant and Quant services were born. We discovered that there was clients that were kind of falling between two spaces. An accountant typically, you would hope they guide you through the process and they would give you good advice along the way, but predominantly it's about compliance. It's about getting the forms in at the right time, paying the right amount of tax. And yes, there's guidance, but I found that in the profession, there was quite a lot of people that maybe that was the end of the service. Quant kind of fills the gap in between, where a business maybe is too large to not have that strategic advice, but maybe isn't quite at the stage where they want to invest for a full-time FD or take on board that full-time financial consultancy piece. And I sit for a number of businesses as a non-executive, where through Quant, I go and advise them on their board. I give them that steer. And of course, it saves them money because ultimately they're not having to pay a full-time role, but they're still getting that support and prep that they need in their board meetings. Something I'm extremely passionate about. I think that the quality of service my clients get is superb. I wouldn't be doing it otherwise.
Can I just intersect, Dan, and ask,
Absolutely.
could you elaborate a little bit on what was it that you felt was missing, particularly from like the accountancy side of things?
Yeah, I mean, this is by no means something that's missed as such by an accountancy business. It's just that over time, I've discovered that there was a small number of clients that I was maybe having a deeper relationship with from a financial perspective. I was meeting them weekly of an evening at their board meetings. And I felt like that we were at the stage where they kind of needed to formalize that process for both parties. You know, what can you expect from me, but also what can they expect back? And these contracts give us the ability, if you like, to steer those businesses. They tend to not be quick wins either. You know, these relationships develop over a long period of time. So not all clients fit the bill, if you like, for a quant client, simply because I might not be the best fit for them. And that, of course, that happens, or vice versa. They might not be the ideal client for Quant, because we want to help businesses grow. They need to fully invest in the advice that we give. And ultimately, a successful client, a growing client is great for both sides of the agreement.
So is it about building that deeper relationship then that you might not get with a typical accountancy relationship, which deals more so with the technical side of things? It's about elaborating on and diving a little bit deeper into that business relationship, so you understand, you know, you invest your time in understanding your client a little bit more.
Absolutely, Jen. I think with accountancy and accountancy service, which I'm well schooled in, there are technical aspects. There is a delivery point. There's a statutory deadline to hit, a tax bill to pay. And I think that over that time, I've worked with a huge number of clients. I've been very fortunate to work in a whole manner of sectors and be exposed to a whole area of business planning, of corporate finance, of buying and selling businesses. And I think that with that experience means I can give a broader range of skills than maybe just from a financial impact. So there is a business advisory piece, if you like. I'm an entrepreneur myself. I've invested in a number of businesses. I've made a lot of mistakes along the way, and as I'm sure most entrepreneurs have. And I've learned from those things. So it's coming from somebody that's been there and done it to a degree, and learned from it, and still continues to learn, of course.
I'm curious, how does that feel for you when you're doing that role? Does it feel more satisfying to you if you have that deeper relationship with someone, as opposed to, I don't want to say superficially, but let's say just dealing with the technical side of things? There is a certain level of superficiality, perhaps, that you don't build that human relationship. So does it feel more satisfying for you, and what impact does that have on your clients, do you think, that the ones that fit with the work that you're doing?
Yeah, absolutely. I would say, if I'm being completely honest, I wouldn't say necessarily more satisfying, only because I strive to have that relationship with all clients. So whether it's my accountancy work, whether it's this consultancy piece, I do strive to have that relationship. I think that all that happens in these cases is these are businesses that naturally want more touch points with me. So rather than maybe 2 or 3 meetings a year, there's a time commitment from both parties to meet up far more regularly. Now, I would hope that any clients of mine from an accountancy perspective have felt that there's a true, not necessarily superficial relationship. Of course, there are a number of clients that maybe once a year, because of their choosing or our agreements or whatever. But on the whole, I would hope that I have that relationship regardless. What I would say is it's more satisfying because I can impact change more. And I feel that because I'm able to reach out into more areas of a business, and I can kind of look at other competitors and benchmark and use my experience, and also behind that still provide robust tax and financial planning, that I feel like I'm having more of an influence, and I enjoy that. That's the part of the business that I'm hugely passionate about. Don't want to talk down the technical side. I'm kind of time served putting together a set of accounts. I can do those, but it's not the kind of sexy work, I guess. I think that the sexy work comes from helping change a business's fortunes, and that's what I strive to do.
Yeah, so it feels like, oh, sorry, Nick. It feels like you're more a part of the work that you're doing. Over to you, Nick.
Yeah, absolutely. And I hope you don't mind me picking up on this point, Dan.
Yeah.
You talked about your biggest mistake along the way. I'm very fascinated by people's mistakes because, as you learn more from them than you do from the good stuff. So, could you expand on your sort of biggest lesson learned or your biggest mistake along your journey?
Yeah, I think there's probably a couple that stick out. I mean, pandemic nobody could have seen, but going into the hospitality sector during 2 months before the pandemic was probably not my greatest ever move. So that was a fun one. We stayed closed for the first year. So that, yeah, no investment bankers can be scared of me at the moment from that front. I think the other thing is and then this would be advice for all business owners as well, is properly valuing your time and your expertise. It isn't just about, I'm seeing more and more clients that are going away from hours served in terms of what money changes hands, and it's switching more to a value proposition because you guys are, Nick, I know your background, and Jenna, I'm sure it's the same, but people are not necessarily paying for you to be sat there for an hour to help them. They're paying for the years of experience and training and education that you've got behind that, and so value driven propositions are more important. And I think early on, I probably was working with the wrong type of clients with the wrong kind of service, over delivering. And that probably wasn't good for either of us, actually. It's not just a one-way street, this. If I'm not fully invested with a client in terms of feeling like it's fully respected on both sides, that probably isn't the ideal relationship. So definitely become more selective as well in terms of the clients that I can help drive value with.
Yeah, that hyper focus thing comes from experience and lessons learned, doesn't it? And one of the things that I find very, very fascinating in the business world at the moment is, we're going through this technological revolution, but there's some behaviors that need to change coming out of our previous industrial revolution, which is units of time focused on, the more hours I work, the more I achieve. The 9 to 5 business model, and in the new world, in the technological world, we need to be more focused on our outcomes and delivering outcomes for ourselves and for our clients. So it's a change, it's a rewiring from the industrial revolution mentality, the traditional schooling mentality. It's knowing what screw to turn, isn't it?
Absolutely. And I think that's a really important point you make, Nick, in terms of driving a work-life balance as well. It's, these people that you do have to work hard. I've been there. I've done the midnight shifts trying to launch businesses, and it's hard graft. But I think the important bit is the vision at the end, to say it is about value. If I can show a client an outcome in 2 hours, they don't care if it's taking 2 hours or 10 hours if they get the same outcome. And so it's about getting there in the most effective, efficient way. It's not having to burn the candle at both ends, slog your guts out, miss the family growing up, all of that thing, even though that is an important part of any business at some point.
Yeah, absolutely. And
the other
just
thing you mentioned, oh, sorry, Nick, the other thing you mentioned was
actually,
technology. And of course, in my sector, my profession, that's had a huge impact. There's been, I know in many professions and industries, there's been a switch away from the kind of traditional office base and the 9 to 5 working and etc. But I would argue that the accountancy profession for some businesses, and therefore the knock-on effect on financial consultancy, has been quite traditional. It's not quite quill and ink, but quite traditional. And we've steered forward. We've really moved forward with that process. We've now implemented technology in Quant that means it has its own software support packages in place, bespoke to our clients, and it's very digital based. So that makes the world a much smaller base, and we have clients right across the country. And I would argue that I feel just as close to those people as I do with my clients in Chester and in the local area.
Yeah, it's an interesting one, isn't it? And from my own experience of starting at my first business in 2004, I was using the old Sage package in the evening. I was throwing everything in it. The whole concept of a bank account linked to an accounting piece of software was just it just seemed in the future. And here we are today with this wonderful automation that is getting more and more sophisticated. And obviously, businesses are going, needing to change, adapt to that. Where do you think that is going? There's been a dramatic shift since Nick, working every single hour, throwing his invoices into Sage. Where is that going to be in 10 years from today?
It's actually quite an interesting point, because I think it's almost coming full circle in the SME market. So it kind of, Nick in 2004 dropping all of his information into Sage, I would say that I saw clients coming away from that. There was more prevalence for bookkeeping services and accountants kind of doing a one-size-fits-all VAT work, compliance, etc. And now what we're finding is, with the advance of things like Xero, QuickBooks, Sage, and the adverts you've probably seen on TV saying they'll take care of your taxes and everyone's a superhero and they can do it themselves, and how easy it is, that actually clients are now becoming more sophisticated and kind of putting more stuff together themselves. For my profession, that means that the value added advisory piece becomes more important than ever. I would say that I don't think it's quite as easy as these adverts make it sound. And I think there's still a place for, a year-round service from accountants and the financial consultancy side that I do as well. But what I see now is that the accounts year end, for an example, will happen to just be 1 month out of 12. Your service is always on. You're working every single month of that year. It just so happens that 1 year in a month, you take the data out of the software and you file a set of accounts. But the ongoing advisory consultancy piece needs to be there month on month on month, because we have MTD coming in for more people in the coming years. So MTD is making tax digital. Some people will have heard about it in the press. It's already in place for some businesses, but ultimately, the UK government wants us to be the most sophisticated tax district in the world. And as part of that, they want an almost live tax picture from a business regularly. And so the next raft of sole traders will come into that in the near future, which will bring a new pressure around in the profession. So it's really interesting time. We've been through this before. We had RTI information for payroll, which I'm sure some people listening to this will have pained through, but it's switched away from how payroll reports were filed and they became real-time information. So it's something that I think that gradually needed to happen. But I think it will probably be accelerated in the next 2 or 3 years. And as I say, with the emergence of these online packages for account bookkeeping and TV adverts, which seem to be on all the time at the moment, it's only going to go one way.
Yeah. Do you see a trend in certain types of business owners and certain types of entrepreneurs that sort of that do the right thing at the right time? Because, from my perspective, the rate of change is going to be huge. The reason why we're doing Mountain Summit is to basically prepare people internally and externally about the future to manage that rate of change. And I love the line, the right thing at the right time. Do you find there's a certain type of entrepreneur or business owner that has that level of focus, knowing what screw to turn? And do you traditionally try and work with them? And how do you find working with maybe the less embracing style entrepreneur or business owner that may be a little bit stuck in the way he does things? And what advice would you give to them?
Yeah, it's a real fine line, Nick. I think there's a tightrope. As an entrepreneur, typically, you're not you personally, but you tend to be quite bullheaded. You've clearly set up your own business. You say, right, I'm going to go and get this. You're self-motivated. You're used to having to work the long hours and get this thing moving. But actually, the most successful entrepreneurs that I've worked with are the people that actually recognize that maybe they're not the best at every single aspect of that business. They can let go. They don't need to handle every single part. They can devolve that responsibility. So openness, which was a phrase you used then, is vital. I think that you have to be open to trying new technology, passing work on to people within your team or in the wider network, such as Quant, the financial consultancy, for example, that may be in a position to better advise you and better prepare you, in the same way that I would not be able to do any of the things that my clients do if I had to go and cook a meal from the hospitality sector, I'd be hopeless at it. But at the same time, I would know that I would devolve that responsibility to somebody else within my team. And I think that's important. So yeah, I think an openness to, particularly, using it as a reference to Quant and their service, I think an openness to talk to us about your business planning. Yes, it has a financial steer, but just the wider experience that I've had the benefit of working with. Every client that I'm talking to, they may only have 1 or 2 businesses in that area, but I may well have worked with 30, 40, 50 in that arena. And I've seen the things that have worked, but also some of the things that maybe other businesses would have learned from as well.
Yeah, definitely.
Do you see that as a limitation, Dan, or something that causes people to make, I guess, financial mistakes, but mistakes in general in entrepreneurship? Is a cause of that urge to want to control everything yourself and have direction over everything, as opposed to, like you say, giving up some of that control?
Definitely, especially for new startups. I know we'd mentioned new startups earlier. In a new startup, ultimately the capacity for the business often is only the person that has started that business. So once their time is filled up, that's it. They have to either recruit or outsource. So they kind of hit the limit of what they could do. And I think that very quickly you get to a stage where, as a business owner, you have to value your time. You have to be open to giving out the more mundane things or losing control of certain functions. Yes, you can still oversee them, but by doing that, it means that from a business prospect position, you're much more open. There's much more room for growth because you are not using the best of your time. If you're inputting data, for example, as a business owner, well, there are hours that you could be out on the road spreading the word about your business, for example, or steering a team or training or recruiting or whatever it could be. But it's very, very important that the senior leaders in businesses use every single hour of their time in the appropriate ways. And that is probably the areas that will impact that business the most. It's not on peripheral functions that ultimately could be outsourced or recruited for.
I think that brings us back to the kind of quality over quantity kind of theme that Nick touched on, of moving away from that tendency to want to be doing more and more, being busier, taking on more responsibility. Because I spoke to someone about that the other day, actually, of like in our culture, and I think this applies here, we have a bit of the word that came to mind is fetish. I don't know if that's the right word, but we have a bit of a fetish for being busy, and we I think we seek that approval from people of, like, and people say, oh, look at you, aren't you doing a lot of stuff, aren't you managing really well? And I think we kind of crave that. So it's interesting to consider that in an entrepreneurial perspective when you're trying to run a business and manage a team and use your time well.
I've been there, Jenna. I've been that person. I've been the badge of honor because I'm there at 11 o'clock at night finishing tax returns. I've lived and breathed that, and it has an impact on your life away from work as well. And I think that is only sustainable for so long. That badge of honor, as you say, it probably is a fetish towards being seen as the hardest working person in the room. That's a good trait. I'm not saying for a second that isn't a good thing, but I think that there is reason and there are ways to control that sensibly, and one way to do that is to say, hang on, I'm probably not the best person for this particular role within my business, and I'm going to reach out and see if I can get support or help with that. And I hope that's where Quant can come in for certain areas of businesses.
Yeah, I think one of the interesting, we've talked a bit about the future and the rapid level of change that's going on within the world of business and certainly within finance, and you guys are embracing that at Quant. I really also like to look at the wisdom that is out there. I'm a 44-year-old man now, and I'm
44, Nick. I would never have believed it.
I know. Yeah, so I'm sat there looking for wisdom, and there's a lot of wisdom in the past. I really, really embrace, listening to the likes of Ray Dalio. I'm a big fan of the likes of Charlie Munger and Warren Buffett. And what is very, very interesting is these guys have been going for decades, haven't they? Yep. And they've been through so many big issues, and they've got some very clear principles that they get up in the morning and apply to what they do.
And that's where, Nick, I'm really excited. Sorry to cut across you, but I think it leads in really well to what Mountain Summit are doing. That's one of the areas that I'm really, really excited to be there and to see what goes on, because there are a number of inspirational people in the room that have expertise in areas that I've not even been exposed to, some of these breathing techniques that I spoke to you about, Nick, and things like that, and wellness and empowerment. And I'm super excited because I think that it sounds so cliche, but I honestly am like a sponge with these kind of things. Like, I'm seeing somebody with a new skill set, and I think not only can I go and learn this process, but if there's something I pick up from the event, that might be something that I can then offer to my clients as well, and spread the word and be a more rounded business advisor. So, it leads in superbly to what you guys are doing at the event, and we're really proud to be sponsors and to be helping you along with that process.
Yeah, no, thank you, and really appreciate that. But speaking about Warren Buffett, I know that Warren Buffett, whenever he looks at a company from which to invest, and he is arguably the one of the world's best investors, he looks at a balance sheet, and I always see that financial statement as something that's really, really overlooked by entrepreneurs. Why do you think that is the case, and what can entrepreneurs get from understanding a balance sheet?
It's a great question, and I would agree with you. I think a balance sheet, especially again in the SME sector, I mean, when you're talking about PE and sort of venture capitalists and that kind of thing, it's different. But in the SME sector, a balance sheet is overlooked, and the reason it's overlooked.
Can I just ask, what does SME stand for?
Oh, sorry, yeah. So they're small, medium enterprises. So it's kind of businesses. There's not kind of necessarily a definite definition of it, but it's a smaller entity up to probably 10 million quid business, that kind of thing. I think that in that sector, it's overlooked because, and I'll come on to what a balance sheet is in a moment, but a profit and loss statement, which most people know, what profit have I made for the year? That's what drives a tax bill. And ultimately, in most cases, the reason we're drawing up a statutory set of accounts for a small business is to work out what tax they owe. It's not necessarily to plan for the future. You would hope that would come out with regular advice through the year, not just on your statutory year-end accounts. So the balance sheet gets overlooked because it doesn't really have an impact on what somebody pays as a tax bill. The balance sheet, unlike a profit and loss, it's a list of all the assets and all the liabilities of a business. So the things that you own, including money owed to you, including the cash at the bank. And then on the other side, less all of the money you owe out. It could be loan finance, it could be trade creditors, could be to the tax man. So there's this balance sheet kind of amalgamates all the things that will get carried forward to future years. The profit and loss is about what money did you make this year. The balance sheet is what position do we start the following year at. So the balance sheet is a little bit more forward looking. And I think that that's where Warren Buffett's point comes from, that you could have a fantastic single year profit in a business. You could be geared up, which means you've got loads of debt behind that profit. It could be structured in a really inefficient way. You could be cash poor. You could have assets that need renewing. There's a balance sheet will tell a lot more to the story. It'll add a lot of flesh to a business. And ultimately, the balance sheet is the net worth on paper of a business. Often that isn't the case for various reasons, which we could do a whole other podcast on. But ultimately, it gives more of a forward look at what a business is doing rather than just a single year in isolation.
So if you're looking just at that profit and loss as opposed to the balance sheet, that's might give you a false impression or a false sense of security maybe about the financial decisions that you're then going to make in the foreseeable future.
Absolutely, Jenna. So a great example at the moment is a lot of businesses have taken advantage of COVID support, bounce back loans, etc. So businesses may be doing well. There may be some COVID grants in their profit and loss accounts. There may be, some support. And I'm not saying for a second that they haven't also suffered as well. But what we are finding in some cases is you've got quite a swelled balance sheet. There looks to be quite a lot of cash in the bank. The business may have made a small profit in the year, even through COVID. But by looking at the balance sheet, you might be able to see there's 10, 20, 30 or up to 50 grand in a bounce back loan sat there that will need repaying. Well, those repayments won't show on a profit and loss. Capital repayments of the loan will not show. So all of a sudden, the business hasn't just got to make enough profit to make a return to its shareholder and pay the wages, etc. It's got to also generate enough cash to pay off a loan debt that sits on a balance sheet. And without looking at that, you wouldn't know. The other thing with the profit and loss is it's very retrospective. You get 9 months after the end of your accounts period to file a set of accounts in most cases. And so in theory, if you've entered a transaction on day one, that would go on your 12-month set of accounts that doesn't need to be filed for another 9 months. So you might be reporting a transaction 21 months after it happened. That's a real risky place to base your business decisions on. That's where the importance of good advice through the period, management information, that kind of thing.
Yeah. So it's sort of like when you've just been paid and you book a holiday maybe before you've budgeted out what you have to pay for the year, like your house bills, etc.
Absolutely. Or the one that happens every year, unfortunately, is self-assessment tax bills in my world. So sole traders earn the money through the year and then realise in January there's a big lump tax bill that's going to be taken in one go. And yeah, there's no kind of forward planning for that eventuality. Another one that happens in limited companies a lot is the corporation tax bill, which comes in a lump at the end of the year as well. So it's a little bit different than the kind of pay-as-you-earn payroll world where a nice man or lady takes your tax and national insurance off you. No, that doesn't happen anymore. That's in the corporate world. It's, there's a lump sum coming and there's not much you can do about it.
Yeah. This kind of links into the next kind of sort of financial presentation that businesses give, which is the forecast. And a lot from my experience, the majority of early stage businesses don't get their forecast and predict the future accurately. They're overly optimistic in some cases, particularly a lot of these high growth tech companies.
Yeah.
They really, really struggle as well. What advice would you give to certainly early stage SME entrepreneurs that are forecasting and to do it more effectively, to meet their internal needs and the external needs with credibility and predictability?
Contingency. I think building in some sort of fat into a business plan is really important. I know there's a temptation, especially where people are looking outside for finance and support, to paint either a super positive picture of a business, often for the private equity sector, to say, look, this business is going to be amazing, we just need a little bit of cash to get us there, or a super negative picture sometimes to show a need for cash. Instead of the realistic picture. And I think that what you need to do, you need to benchmark, you need to be realistic with yourself. If you're forecasting triple digit growth, then unless you've got a real strong story to say why, there's something not quite right there. I think realism, I think actually speaking to somebody that isn't involved in the day-to-day, you might think you've got the greatest business idea that anyone's ever seen and that you can do it on a shoestring, but you're in it every day. There might be someone down the road. It may be an advisor at Quant that says, hang on, I've seen this before. You haven't factored in this cost, and whatever that cost may be. It may be a tax bill. It may be outsourcing. It may be rates, rent, whatever. There's always something to build in. And I think that whenever I meet people that are forecasting, I've done a number of fairly large forecasts myself for the PE market. And I think that there is always a tendency to be super, super positive. You lose a lot of credibility if after the first 2, 3, 4 months, you're tracking well off the plan you made. It makes it a very difficult message then. So I think,
sorry, Dan, is that for investment purposes? Like you paint a positive picture because you want people to believe and invest in your business? Yeah, absolutely.
And often, it isn't always just about the numbers, it's about the people, the infrastructure behind it, the story that goes on behind a business. So it isn't just about the numbers. But of course, if you're using that to underpin a business plan for investment purposes, of course, you want to show it as positive as you possibly can. But these investment transactions, they're not over in a week or two. And once you've submitted a forecast or a plan, they're going to want to see how you're tracking against that plan throughout the process of potentially investing in your business. If you've made a plan that you're going to do 100% triple digit growth and you're tracking at 20, well, then it brings the whole credibility of the story that you presented in the first place into question. And I think that's a really risky area. So look, forecasting is a difficult exercise. Particularly if you're entering into a new market or you've got a new or innovative idea, there isn't really, it's not like putting tracing paper over another business and saying, well, we're going to do similar. You've got no idea. But I think you can be realistic about business uptake. You can reach out to people like myself and make sure we're capturing all realistic costs. We're looking at maybe seasonality in the business. We're looking at the wider global economic impact, which at the moment, for various reasons, is very, very turbulent. So there's a lot of other factors to consider. I just think it's a really important process. What I would also say is it has twofold benefit. Yes, from an external perspective, it may display your business a certain way, but I think internally, with a good forecast budget process, it can help you in team meetings, target setting, to look at during the year, how are we tracking against the plan? And it's not a stick to beat anyone with. It's to look at and say, look, we're not tracking where we thought we were going to be here. That's fine. We've got a question. Now we need to go and find the answer. Why are we not tracking? Is it we're not working efficiently? Are we not charging enough for our services? Are we paying too much for our costs? There's a whole range of reasons that could be around it. So you then use your forecast as a template to ask questions and to constantly challenge the status quo within your business, and hopefully to strive to be in a better place overall as well. So forecasting, budgeting, massive part, hugely important in any business.
Yeah, if I spoke with my father, who was a bank manager from the 1950s onwards, he would say, create a 5-year business plan with 5-year forecasts. I sort of suspect in the world that we're living in right now that the recommendation as to the time period that you should create a forecast for is, would be different. What are your thoughts on time frame?
I mean, you could do a 1-month forecast, and for some businesses it would be out of date within a week. It really is a challenging place. I don't think it's unhealthy to have a long, short, medium, long-term plan, and to track against that. So a 5-year forecast may absolutely be fine, but obviously it's kind of a small change in day one could mean a massive difference on your 5-year plan. So all I would say is, if you are looking that far in the future, absolutely fine. Make sure you're flexing your budget forecast along the way. We're revising it. So if you're tracking at the end of year one, miles away from where you expected to be, don't stick with the same forecast. Revise it going forward so we can get back on track, because otherwise you're going to consistently be giving data that's just a mile off where you thought it was going to be, and you're not comparing against realistic new targets.
So, you obviously sit on numerous boards, Dan, and you advise many companies of all different sizes. What would you recommend? So when would you recommend an entrepreneur bring on Quant?
It's a really good question. Obviously, I'm going to say at any time. Of course I am. I do think that there are sweet spots for us. I think that where you have the time, I would say time is a big factor in this, to invest with us. It's not necessarily a financial investment of any great shakes. I mean, that obviously can be tailored to suit. I think it's being fully invested. So it's that you're the right character to want to reach out and embrace our help, because, I'm one of these advisors. I will stick my neck on the line 10 times. And if I get 9 of them right, great. I'd prefer to be that way round than to be sat on the fence all the time. So I think you have to be open to being challenged. And equally, I will also accept being challenged regularly. And I am. And I think that it's that collaborative relationship that, hang on, I really want this guy or these guys to come along, and I'm going to listen to what they've got to say at least. And who knows, maybe along the way, they will help me and my business. So I think it's more a personality trait. Are you in the place where you want to listen to external advice? There are some businesses that the lifeblood of them is that it's got a single ruler, and that's how they continue. And they probably would not be ideal for us, because I could give them the greatest idea in the world ever. I could give them the greatest tax planning opportunities or whatever else it may be. And ultimately it wouldn't be implemented, and you look like the terrible advisor then, because nothing's changed. So I think it's more a personality thing rather than this size business or this sector business. I think most things can be tailored there.
Yeah. One of the noticeable things that I've observed over the years is, as companies grow and get bigger, and they have a CEO is put in place, that CEO typically comes from a finance background. I see that sort of trend in FTSE 100 companies or AIM listed companies.
Yeah.
Why do you think that is the case? Why don't you think other departments are leading organizations? Why do you think finance or finance experts are at the center of growing companies?
I think any single decision in any business, if you keep asking why, the answer would eventually be money. And I think that that's where a strong financial background for any business owner is important. Now, I'm not saying the owner themselves has to have that. They can reach out to somebody else from outside of their organization, again, such as someone from Quant, to give that support. But I think ultimately it all boils down to cash is king in a business, isn't it? Ultimately, that's how you pay the wages. That's where the tax bills come from. That's where the decisions make. I mean, unless you are a not-for-profit, then ultimately there are obligations as a business owner and as a stakeholder that you've got. And I think that that's where a good financial background would help any business owner.
I was just going to say it provides that structure and functionality to a business. So maybe it's a personality trait as well, like the people who are drawn towards studying and working in those sectors, they have that structured approach, which allows a business to remain functional.
Yeah, I think so. I'm definitely a systems man. I'm a lot of fun at parties, I promise, but I am a systems man. And so, yeah, I think you're right. It's implementation of controls along the way. I've got a background in audit, so, kind of checks and balances and systems that work, that we can't break, that can't be overridden. I like that process, but I still also think it's really important that, and I've struggled with this at times, that when you are system orientated, you still have to be open to change. So just because you've got a system in place today that works and can't be broken, it doesn't mean it's the best system tomorrow. And I think that's important. And that comes back to the openness we spoke about in business leaders earlier.
You have to integrate that flow and that flexibility and that capacity to change as well.
Absolutely. Change. I think it's the theme throughout this podcast, is that it's here. It's not something you can, by doing nothing, you're actually making a decision. And I think that's where it's become really interesting. I have some business owners where, they're at a turning point for their business and they think, do they go down the right lane or the left lane? And they don't quite know which one to take. But every day they don't take either. They're making a decision to stay as they are. And I think that's been, for me, somebody said that to me many years ago and it stuck with me, that every day you're standing still, you're making a decision to stand still. It's quite empowering, and it kind of has made me more open to change, I think, in organizations I've been involved in.
Yeah, and I think, this leads into what we started off talking about, which is absolute clarity of outcome. Where are we trying to get to? And we may, like a helicopter pilot, have to make course correction with our system in order to achieve that goal, and just being very, very open to that. I was sort of laughing a little bit because we've been over 30 minutes having our conversation, and we've just mentioned the line "cash is king." Isn't that fascinating? What a great line that isn't used enough these days in the business world.
I think many businesses of course been really, really impacted by this kind of unprecedented time that we've been through. And I'll be completely honest, there have been some businesses that have really struggled, but there's been some that I've been around that have actually flourished through this process. Some of it can be luck. You can be in the right sector at the right time. I'm sure if you were a hand sanitizer business in February 2020, your fortune suddenly lifted in March. But I think that often it is the businesses that kind of embrace change in their sector the quickest that maybe made the most of any opportunities that were presented. Obviously, some sectors didn't have that ability to take advantage of it. Hospitality in particular was really, really hardly impacted hardly. But I think that, again, good advisors and good business people, the aim is to, and I don't want to use Boris's phrase, but we're trying to flatten the curve here. If you're going to lose business, you're trying to mitigate the impact of that as far as possible. If the whole hospitality sector has been affected, how do we make sure that ours, out of being affected, we are the least affected? That's all that you can do in those sectors and those times. So I think, it's not always about growth and more money in the bank. It sometimes is about loss mitigation or safety management. There's a whole range of reasons that businesses may engage with our services. But predominantly our aim is to help businesses meet its goals.
Yeah. Who inspires you, Dan?
It's a great question. You see, along the way, I think early on, I mean, I was a typical teenager and it was musicians or footballers. And over time, I've actually come across, they're not necessarily the most wealthy business owners or have the most innovative businesses, but I have met some phenomenal people in my working life. So yeah, you mentioned the Warren Buffetts of this world, and they're the people that grab the headlines. But there's people that I meet day to day that have got fantastic businesses that slog their guts out as a business, not necessarily as an individual, that bring fantastic services to the local area. So yeah, the types of businesses that I feel inspired by are local businesses that bring about change in community. It isn't just about huge organizations. And I think that's an important message here as well, is that Quant don't just work with huge multi-million pound organizations. I have not-for-profit work. I do a lot of work with smaller entities, and I get a huge amount of pleasure in bringing about small amounts of change in those organizations that may mean the difference for a family going on holiday that year, for example. That gives me immense pleasure. So yeah, inspiring is, it's not something I've really thought about, Nick, to be quite honest, but I guess it would be those kind of entrepreneurs that have been there, done it, taken their destiny into their own hands and worked blooming hard to build something for them and their family.
I think your answer about people that contribute to the community on a local level, I think that's fantastic, and I certainly feel that. And I think one of the reasons, again, why we want to do Mountain Summit and we put together the lineup of speakers that we have. I mean, I was speaking with Roger Martin Fagg, the economist, last night about what he's going to be bringing to Mountain Summit. It is going to be super, super special.
Brilliant.
And we've got some insights that we're going to be sharing to people that are attending beforehand, which are pretty insightful. I've read some of it already. But what we're really trying to do is bring that high level of conversation that maybe some of these big corporate leaders get exposed to, the knowledge, the thinking, the systems, and all of that kind of stuff, to bring it to the lifeblood of our economy and our community, which is small growing businesses.
Absolutely.
That's what we're trying to do. So I think we're very, very aligned with your values, and so thank you very much.
Fantastic.
Dan, just as a final couple of questions, what are the first practical steps that you would advise someone to take, an entrepreneur to take, if they want to start becoming more financially conscious? If they're listening to this and think, okay, I want to pay more attention to the decisions that I'm making, to that accountability, what are the first steps you would recommend them to take?
Yeah, it's a great question, Jen. I think setting a plan and then measuring against that plan is important. As I said earlier, about asking questions of your business and constantly challenging yourself. I think a lot of businesses will be using online type real-time bookkeeping packages. I think becoming aware of the reports that they kick out for you is important. So things like on Xero, you can get monthly profit and loss account. Well, run your monthly profit and loss account, put it in your diary. You're going to spend an hour looking at my monthly account. You may think you know those numbers, but it may slap you in the face when you run that report and compare your last 3 months spend and go, blooming heck, I've been spending 50% more on travel costs, and it might switch the way you deliver your service. So I would say measurements and learning how to report and challenge yourself would probably be the most important parts. You don't need to go away and buy an Accountancy for Dummies book and read through it and know every tax law that's ever existed. Reach out for support with those areas. But ultimately, just set yourself goals, set yourself deadlines, and make yourself accountable.
And is there a key message that you'd like people to take away from this podcast? Anything from your own experience, from your experience working with Quant? What is it that you want entrepreneurs to be conscious of?
I think, times are going to get even more challenging. I mean, as we speak now, there's conflict in Europe. We're still feeling the after effects of Brexit. There's balance sheets that are swelled with loans at the moment from COVID loans, etc. So I think, it's not going to get easier. We've got tax that is increasing next April. The rate of corporation tax is increasing again. So I think an awareness and a plan for that process is important. In terms of message from Quant's perspective, we would be delighted to speak to any business owner for an hour or two, give them some pointers, some ideas. We're not hard sell. I hope it comes across that we are nice guys. We want to talk to people. I'm passionate about local business in particular. And I just love meeting new people. And as you can probably tell, I can talk for Britain as well. So I'm quite happy to talk to somebody. No obligation, no hard sell. Just give you some pointers, because I think that, you will get something of value from that process. And even if it is just showing you how I would report on your business and challenge a few areas in your company, I think it may start you along the path to kind of challenging your business and seeing it in a different light.
Thank you very much, Dan.
Thank you both very much. It was an absolute pleasure, and I look forward to seeing you at Mountain Summit.
You're an accounting legend, Dan. Thank you.
I wouldn't go that far.
Thank you so much for listening to this exclusive Mountain Summit podcast. We can't wait to see you at this amazing event.